This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China is importing unusually large quantities of crude oil from Indonesia, a trend traders say is a way to mask shipments of sanctioned Iranian crude shipped in waters off Malaysia amid greater scrutiny of cargoes originating from Malaysia. Declaring Iranian oil as Malaysian has long been a tactic of traders selling to China, the largest buyer of the U.S.-sanctioned crude, market participants say. China has officially not imported Iranian crude since 2022, but its customs data regularly shows more Malaysia-sourced oil than the Southeast Asian country actually produces.
Oil prices eased about 1% on Friday to settle at one-month lows as the U.S. pushed for a Russia-Ukraine peace deal that could boost global oil supplies, while uncertainty over U.S. interest rates curbed investors' risk appetite. Brent futures fell 82 cents, or 1.3%, to settle at $62.56 per barrel, while U.S. West Texas Intermediate crude slid 94 cents, or 1.6%, to settle at $58.06. Market sentiment turned bearish as Washington pushed for a peace plan between Ukraine and Russia to end the three-year war, while sanctions on Russian oil producers Rosneft and Lukoil were set to take effect on Friday.
Moving on to the top news in the energy sector.
World governments agreed on Saturday to a compromise climate deal at the COP30 conference in Brazil that would boost finance for poor nations coping with global warming but omit any mention of the fossil fuels driving it. In securing the accord, countries attempted to demonstrate global unity in addressing climate change impacts even after world's biggest historic emitter, the United States, declined to send an official delegation. We should support it because at least it is going in the right direction, the European Union's Climate Commissioner, Wopke Hoekstra, told reporters before the deal was gavelled through.
A Japanese regional governor on Friday gave the green light for a partial restart of the Kashiwazaki-Kariwa nuclear power plant, the world's biggest, as Japan tries to revive its nuclear sector and reduce fossil fuel imports. Approval by Niigata Prefecture Governor Hideo Hanazumi will remove the last major hurdle for plant operator Tokyo Electric Power Company to proceed with plans to restart one or two of Kashiwazaki-Kariwa's biggest reactors. As electricity demand is set to grow due to data center and semiconductor business expansion, it would be difficult to stop something that passed the country's regulatory standards without any rational reason, Hanazumi told a briefing. Next, we have the top news in metal markets. European companies that make products from copper have warned they are facing critical shortages unless the EU takes action to curb exports of scrap, as it has for aluminium. Large amounts of refined copper have been shipped to the US by investors attracted by higher prices there based on tariff expectations. At the same time, exports of copper scrap from the EU have surged by 31% since 2022, with about half going to China, according to a position paper issued by companies accounting for more than 90% of European copper scrap usage.
Lithium prices in China fell sharply on Friday, short-circuiting a rally, after the main exchange stepped in to curb speculative trading and on a report that battery giant CATL could restart production at its flagship lithium mine. The most active lithium carbonate contract on the Guangzhou Futures Exchange closed daytime trading down 9% at 91,020 yuan, $12,804.21 per metric ton, hitting its lower limit and giving back most of this week's gains. On Thursday, GFEX said it would increase transaction fees for some futures contracts of lithium carbonate from November 24, and it also planned to limit the daily open position for non-futures company members.
We will now look at the top news in the agricultural sector.
Global coffee prices plunged on Friday after U.S. President Donald Trump removed 40% tariffs on imports of many Brazilian agricultural products, including green coffee beans. U.S. retail coffee prices rose an annual 40% in September, due in part to tariffs. Rising food prices are a major factor behind Trump's approval ratings falling to their lowest since his return to power, a Reuters, Ipsos poll found. Trump's overnight move follows a similar order announced last Friday to roll back duties on coffee and scores of other products from producing countries.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.